Social Heavis over here. Welcome, 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 welcome. Switch the audio source around. Testing, testing, testing. Can you hear my voice? We're gonna pop in just a moment. Beautiful day to be live. Beautiful day to be live. How's that about for an intro? Found a new intro song. Love it. Fucking great vibes right there. Great vibes. Love it. Great vibes. All about the vibes. All about the vibes. Alright, let's pause this. 3, 2, 1, and boom. Pause. Welcome everybody to see the boys Social Heavis sound in here. Transition in 5, 4, 3, 2, and 1. Bang! Looks like my audio is working fine. We're in the orange today, so I'm sorry if a little laggy doesn't come out exactly clear as day. But the audio's fine, and that's the most important thing. Not really, but. Alright. This should start from the mid-ish time frame, mid-time frame area. Alright, so let's start from this high right here. Talk about this guy right here. Him, her, whatever you want to call it. This to me, this reaction from this low, this screams to me conclusion of whatever pattern was made from this low to this high. To me, this entire time that this was developing over the week or weekend, whatever, from this low to this high, I also had a strong feeling that it was going to become an ABC. Just because I had a strong feeling that this was this here, that, right? So after every 5 waves, you get a 3-way correction. So that's what I was looking for. We had 5 up, 3 sideways, and it seemed like we had another 5 up to conclude this 3-wave corrective phase. And then after that fact, we had a very, very harsh reaction from that low. So to me, but I don't think it's going to happen that way anymore, just because of how fast things are happening. So for a valid, just like wave 2 or X wave, this is where we have to make a high point in, right? Or at least retrace 30%, or do both. Well, we did both. Here's 30% and in price. Here's 30% in time. Well, we did both, all while making a 3-way pattern. That's a valid reason to say that this pattern is concluded, and now we're heading down for the sister wave of this wave, for either an A, B, C zigzag, or a more bearish 1, 2. This 3 would get all the way below these lows, and then even further down to like 500 or some shit like that. I don't know. Let's get degrees appropriate here. Like this. Okay. We really don't know yet. But based on the fact that we rejected pretty harshly, we broke the 0 to B trend line in less time and complexity than it has taken to create that trend line. Therefore, that literally triggers a trading rule for us as an Elliott Wave trader, that if that gets broken in less time and complexity, that screams to me that this pattern's now ended, and we should be looking for any reason to be shorting any rally in this area as long as we sustain certain levels. Right. So that's what I've been looking for. That's what I'm looking for. We made a valid three-way pattern to the high side, all while making both requirements in time and price. Bitcoin during the entire time stayed flat, sideways, which made me even more confident that this entire pattern that we're seeing on Ethereum was corrective rather than impulsive. Because Ethereum moved up pretty well, and Bitcoin just went straight sideways, right? So, and also, with Bitcoin doing that, it makes me really think that this is... I know I saw some Elliott Wave traders online labeling this 1, 2, 3, 4, 5. That could be right, but because the way Ethereum reacted in this little area here makes me not believe that, if that's going to be the count. This obviously, like, this can't be 1, 2, 3, 4, 5. That makes no sense, right? Like, that can't happen, right? So let's draw this channel out here. So I think this is a B wave in here, guys and girls, ladies and gentlemen. One, two, three, four. 1, 2, 3, 4, 5, then the corrected phase. Yes, price didn't really go anywhere, but we met the requirement in time. Here's that requirement right there, that vertical purple. The requirement in price would have been here. You don't need to do both, you just have to do one of them. And the fact that, let's just do some measurements in time, because this is going to be really important for Bitcoin here. The 0 to B trend line, if this is true, 0 to B. So the time is taken to develop that trend line compared to the time to develop the break. You see that we broke the 0 to B trend line. So this is the time it took to create this trend line, right? 0, A, B, and here's C. The time it took, measuring against the time it took to break it, here's that 1 to 1. We broke it in less time. Therefore, that triggers the idea, the possible valid idea and logical idea that this ABC is concluded for sure, and that we should assume the prior trend is to continue on. When I first looked at this chart a long time ago, the two ideas I had were hopefully that we would sustain this area in range for a while for like a B wave. But we had to sustain levels, and we really didn't want to break down like this, especially on Bitcoin. Bitcoin definitely looks like it really wants to take out the lows. Ethereum might be a little bit different, but Bitcoin, based on those facts, I could confidently say that this was a valid ABC. Like this. ABC. And we should assume, as long as we don't regain 22,500, 22,600, that this is going, I would argue 20, 21, 22, this area here. If we can't regain this area right here, this is definitely going down, and my count will change. I was gonna label this slightly different. I would have to label this. If this here, if we break this low, I would have to label this most likely 1 through 5. I have to double check this little area up here later on. I won't do it today because it'll just take a little bit too much time to develop against that. But 1, 2, 3, 4, maybe 5. I didn't like that count at first. It's valid though because technically wave 4 doesn't recross into wave 2 territory. Wave 3 is the longest. This final wave also does the same thing where this wave 2 doesn't cross into wave 4 or whatever blah, blah. So it's valid, but structure looks a little bit odd to me, so I don't like it. Just looking at it, but it's valid. Could be valid. So 1, 2, 3, 4, 5. If once this low breaks, this 100% triggers this idea that this is a final and fifth wave to the low side. Then we should expect our actual bounce that's going to be like really powerful, really like getting people suckered in, stuff like that. I'm thinking the lower time frame on Ethereum, we're going to tag like 15, 1600. But let's continue talking about this stuff real quick. Okay. So let's go back to Bitcoin. And our retracement's pretty far. What is it, like 60% already? Over 70%. So yeah, I'm really believing that this here was either wave 2 or B wave. It's looking more like wave 2 now. And we could be in some pain here pretty soon. Regain 19,500 on Bitcoin. This is invalid. Regain this level here, we're invalid. And we look to... I'll still believe we're going to break the low, but this slightly changed the count where would consider this all of an impulse. But I don't like that count. Just because of the way Ethereum reacted off the low here. It works, this works though, it works that way. So if we regain this level here in gold at 19,500, I would assume this is the 5 wave here, and then we're gonna sell this bounce here. And like mixing a mini head and shoulder is kind of funny. Shoulder, head, shoulder. Well, for now, based on Ethereum's structure, I'm thinking this is gonna be a small little rally up in here through the day. It's gonna be 1, 2, and then 3, 4, 5, then this will be here, bounce here, like that. So with Ethereum, it's, again, it's the same thing. You know, a little bounce here, coming into this area, looking for rejection, looking for this dead cat bounce area here for rejection. Previous daily open, previous daily low. Here's the midpoint. This is a very strong OB. I've been looking at eyeball right here. Not very strong, but I like it. Just because we can flip the 0.5 here. But as long as we stay below this level here, between 1570 and 1590, I'm thinking this comes true. If Bitcoin does pull that thing I said and just regains that level, that golden level, then I'll turn this into this. This will turn into a giant weird running flat, which happens. That happens. It could happen like that. It's turned into a giant word running flat, and then this rallies. I will know we're wrong once this level gets taken up. Rallies hard, boom, 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 boom. That and this becomes the ABC rather. Okay. But one level at a time. For me, it's more logical that we look for a short coming up in this area. The breakdown, the rules, and based on the breakdown rules, it says that we should be looking for shorts. 5 ways off the top. If this is going to be true, then we should get another 5 ways off the bottom. And it should be of equal or similar degree. Well, it should be of equal degree. Therefore, you should assume some similarities. First target will be here. Second target will be here. With your ultimate targets, if it's wave 3, being here. This area will poise pretty strong support, especially this really bright blue area. It's also a D1 order block plus a D3 order block. This larger one is just a D3 order block. Just like this area here, that's why this reacted pretty well. It's because this was an order block. From this high to this low was an order block. On like the 4 hours, something like that. That's why this move here caused all this. That's why we reacted here. Now the question begs, does it have enough juice in it to be able to push us back above this high? I don't believe so. Just because once we tapped into this, like we broke this high, and it was like very lethargic, you know, like we kept having to reload, coming back inside the range, right? Reload. Break it, reload. Break it, reload again. But this time we had to come back all the way down. I just have lack of confidence in that we're gonna do this pattern here. My idea, my primary idea is that we're gonna do this here. This is 2. And don't rush into things. I'm kind of thinking that based on time here, so these two are very similar in time. This is what I'll assume. What's today? Wednesday? I think they're going to try to fucking really fuck us up in this area and try to make us really sucker in. So, initial move up gets rejected. Holds like this. This is, I think, the old all-time high. And then like that. That's what I'm thinking is going to happen. This turns into like 1, 2 like this. We shouldn't take no more than this much time, though. So I'll limit this to like right here. Jump this back to like here. Jump this back to like here. Like that. Rather. Like that. So probably rally up like this. Break down, come up, like that. That's the game plan. Okay. Losing 15-20, 15-15 will, to me, definitely tell me that we're going to go and fulfill this idea. But for now, I think we're going to kind of range this little area here, kind of get some people confused, suckered in here thinking that this would support, and then get washed. Okay? Then the area I'm looking for a short entry would be 1575 and 1590. My hard stop would probably be like at 1630 with an alert at like 1600. This little area right here, I think it's a golden pocket from this move down, which if it's truly going to be a reversal, we should not retrace more than 78%. That's why a hard stop should be at that 78% level. But mark that golden box area because that's where you should have 1600. Have an alert because we shouldn't. Usually we shouldn't go further than that if it's truly going to do this. Every now and then we do get to that, but it rejects. If you accept above the 0.7, then we know that we're definitely going to probably break the top off. And that goes both ways. If you see like a high like this, and then a lower high, and then that high right here gets broken, and then you pull your fib, you mark your 0.786 for retracement. Because if it's truly going to be if the trend is truly going to stay true, you should not retrace below at 786. And if it does, you know this is going to come down like that, most likely. Yeah, just be patient in here, man. Be patient. I've learned that my type of trades on the hourly usually. I get an idea from the hourly. I use my lower time frames to hit the trade. Some pretty weird price action in here. Below 1530, I was consider start opening up the short, but I think we're gonna kind of range here. So I think I'm gonna stick to that original level at 1515. 1515, break that level. I'll look for a short. For now, I really don't know what will happen in here. I'm just looking for those levels to be met. Then I'll hit that short or enter that short once the breakdown level has been shown. Trying to think. All right, so let's see here. Yeah. All right, so yeah, essentially wraps it up right there, guys and girls. I know I've had some people asking me questions about how the fuck do you use trade points, shit like that. Let me show you real quick. Just run through it. It's not hard. It's pretty straightforward. It's not. You just gotta know what to look for. So just using it as the easiest and simplest of ways of form as possible. You can possibly do it, meaning that you keep all your time frames the same. So it means stick them all to the chart, right? And you're just trading off the momentum based on the chart. That's the easiest way to do it, right? Your trigger for a trade entry, not trigger, your idea to start opening and thinking about emptying a trade is when this, for the bullish side, for a buy, you get this bright, like, aquamarine green color. Right? How do you know when to enter trade? Do you enter trade on this one? No. On this one? No. You have to get at least one solid candle. An engulfing candle like this one. Like, sure, this candle did really break down. But, like, this candle, there's a pretty decent candle going to engulf the previous candle. I would have preferred to engulf the previous two candles just because the kind of range it built here. But it's not required. You just need an engulfing candle of some sort after your trigger has been called to possibly open up a trade. The real way, the easiest way to really get into an entry is by the use of the 21 moving average that I have on there. Right here. Right? If you get the signal and your moving average is still positive, once you accept it, like say right here, then you have more confirmation. Okay, this is right. Right? Then you get in the trade, you put your stop at the low and target 3 to 1 R. That's it. That's literally it. Rinse and repeat over and over again. So say if you even waited for more confirmation here, say you stop at, at the low of the area you entered in. It's either there or there, depending on what your thing is. This one wouldn't have made it if you would have put a stop here. This one would have made it if you put a stop there. But that's it. 3-1R. This one would have been a loss because you would have either entered here or here, so it would have been a loss. This one would have possibly been a loss, but you wouldn't have entered. I wouldn't have entered because you got the signal here, but it went negative here. So you would have to wait for it to give you the signal again to enter the trade. Even though we went back above the 21, the trigger needs to be remade again because we went negative and the momentum could be shifting, right? Even on this one, the momentum is negative. The next candle, it was right anyway, so it doesn't matter. It got washed, right? Then say you're sad because you missed out on this. You're longing this, or you got one good trade and you took like two, you lost or two, and you're kind of salty about it, right? Kind of salty. Well, look what happens here. Right? Look what happens here. You get a signal, a short signal. You get a short signal. This price action is fucking nutty. Anyways, you got a short signal, right? So you're looking for an engulfing candle or a reason to enter a trade. The number one reason to enter the engulfing candle. Sometimes it doesn't happen. Sometimes it does not happen, right? Like right here, we don't get one right here, right? We don't get one. We really don't get one until right here, to this one. So when did you enter the trade? You entered the trade when the breakdown of the 21 happens again. We accepted it, but we're negative. We got the signal that we should be looking for a short. We accepted it, right? For a little bit, but the moving average is still negative. How do we know it's negative? Because it's red still. So let's be patient. Wait, because you never know. This could have found support. Like this, all of a sudden, boom, and then this turns up like that, right? So be patient. Wait for the breakdown. Breaks back down. 1, 2 candles. Once that second candle hits, that's when you have pretty good confirmation that okay, maybe the signal that look for a short because we're topping out on that time frame is true. Why? Why do you think it's true? Because look, we're breaking down. We failed to sustain support. So why wouldn't the idea that hey, the short look for short is not going to come true? And again, just do the same process. Stop at the high of the range, target 3-1R. That's it. But right here, this is a loss. That's fine. It's not going to be perfect. But as long as you keep your losses to 1R or less and your wins 3R or more, you will be profitable. You will. You will be profitable. That's just how it is. Using a 3-to-1 risk-reward ratio type of setup every single time, you literally only have to be a 30% win rate trader. I have done the math. You only have to hit every 3 out of 10 trades to be profitable using a 3-to-1 risk-to-reward ratio aspect. I don't know what the number is when you're like a 4-to-1R. It might be like 40%, 38%. 2-to-1R is like even more drastic. But I found like the happy place in terms of like what is the most, how much loss can one take and still be successful in terms of trading and stuff like that. I found that using the system with 3-to-1R is the best way because it makes it so you could be the least successful in terms of win rate, but still be successful and make profit, make money. That's using 3-to-1R though. You have to just stick to that. Just stick to it vigorously. Sometimes you'll exit early, but that's why you always leave some on the table, like 20% to 50%. Every time my target's met at 3-to-1R, I take off at least 50%, if not up to 80%. Then let the rest ride. Because you never know if that one rider could fucking be a big hitter, right? So, just stick to that. The second way to be using this, you just use the higher time frames. You Because this time frame is your main momentum, right? So say you want to trade off the hourly momentum, so you're just gonna put 1 hour. So now it's gonna give you a little bit different looks, right? Now it's gonna like hold you off on some things. Get you looking at deeper retracements. Like this one right here, like it says for a buy, but it broke below, right? It broke below, so you have to wait. Breaks back positive. Buy signal. Boom. We're positive here. Engulfing handle. Get in. That was a good trade. That was a good trade. That was a loss. Would have been kind of difficult to get in here, but I would have trusted just because we're consolidating sideways. Just going sideways. We're getting all these buy signals. Momentum was still positive. It never went negative. Momentum never went red. Momentum stayed positive the entire time. So all I was looking for was the 21 should be accepted and regained. But it could have got you in trouble just because you accepted it here, broke below, accepted it here, broke below. So. And then let me show you the final. Again, it's the same system though, same process over and over again. Nothing changes. You get a buy signal, you're waiting for a reason to enter the, or a sell signal, you're looking for a reason to enter the market. Either with an engulfing candle that breaks the range of the signals, or with the acceptance of the 21 moving average, or rejection of the 21 moving average, right? The final way to use it, which is like, it's more aggressive, is how I have been using it. But you guys have to master the other ways first before you could go to this point, because this is more of an aggressive type of style. You're gonna get more entries, but you have to really understand risk management and like really stick to stuff like that, which I know a lot of people don't. So what this does, you're using the in time frame momentum, right? An in time frame calculation for momentum as well. Both these calculate momentum in different ways. Okay. This one, trade point, is with the trigger. It tells us when the time frame we're studying is exhausted, it's overexerted, right? The trend in that time frame you should be looking to fade it, right? So dropping it lower than the time frame you're in makes it so you're trading off a lower time frame's extensions and over extensions and under extensions. So that could be good, it could be bad. The reason it could be good is because if it gets you in a trade on the time frame you're desiring to trade quicker than it would if you were to use it standardly. And that's obvious, right? Because if I was using in the 15-minute time frame, my trade point time frame, which is the top one here, if this was 15 minutes, it'll take for a trade point in the 15-minute time frame to top out or bottom out for us to trigger the trade, right? But dropping the time frame to a lower time frame makes it so trade point is working on a lower time frame, so it's going to fluctuate quicker, right? And so it's going to give us more trades, right? But it can get you in trouble. It can get you entering too soon. And you just have to be very mindful of exit strategies and stuff like that. That's why I not forcing this way down your throat. I forced the other way down your throat, which is the more basic way. Using these two as the same time frame. Using the last one as the same time frame, or one larger time frame. But look, you get more trades, right? Like, say if you miss this here, you got this one here. You got this trade, right? Yes, this was an engulfing candle. You wouldn't have been able to get an entry on that. I know for a fact I took a short on this because I remember yesterday I wanted along this little hairy area here. I thought this was gonna go make a little flat here, come here, and I was gonna short that. Then we started breaking down too far. Once we broke it down that level here, I was like, all right, we're going down. Got my signal to short there, added to my position that I was holding from up here. Because I took off 50% here initially. Added back to my position here on that trigger. added again here on that trigger. Closed basically all of it last night right here. And how do I know to exit? Say I enter this trade here. How do I know to exit that trade? Well, if the 21 moving average gets accepted. So say if on that aspect, one of those two entries yesterday, on this one, say here, I entered here, but then price goes here and accepts it, and this goes positive, I'm out. I'm out. There's no reason for me to believe that that idea is right. The 21 moving average is positive, especially if the 21 moving average goes positive, and then look at RSI, SRSI, and it's also positive. Because remember guys and girls, when RSI and 21 moving average agree, that direction's momentum that's most likely going to happen. It really is. That's just how it's always. It's just how I created them. I created them to work in good confluence with each other. That you could trust that when they both agree, that you're most likely going to go in that direction. So if it's positive momentum, we're most likely going to move positively. If it's negative momentum, we're most likely to move negatively. RSI usually leads too, by the way. So it leads here, started breaking down negatively here. Price breaks down underneath the 21 here. And we actually get the breakdown, right? And then look. Price gets reaccepted here on 21. Gets reaccepted here on 21, on the mid-band. And then we fucking fly. Same thing here. Positive, finally here, gets in positive. So you have to really trust that, right? Really trust it. So, if you're going to use the final way, which is my favorite way, which is using the lower time frame as a trigger, and using the in time frame momentum as your bias, that's my favorite way to trade. But you have to really be keen and respect RSI, SRSI, and 21 moving average. And if they don't agree with you, you just have to really, really trust it. Alright, so that's essentially it. I hope my stream went and worked well. I'm not sure because no one really came up in this thing. I said my audio was fine. I said on YouTube everything was fine, but we'll see when I upload it. Alright, guys. It's been your boy, Social Motherfucking Heavy. Catch me probably Friday. I'll try to get an end of the week thing going. Definitely start doing end of the month stuff. More streams. I like doing this stuff. We better have had more. Had some viewers in here, but I guess it's my fault for lagging so bad. So well, not lagging, but lacking so bad. It's my fault. So I'll be more consistent. I've been saying that, but I'm real about that now. I'm about it now. So yeah. Until next time, we'll try to get it popping for sure Sunday. If not, like Sunday afternoon, evening. If not, we'll try for Friday for like end of the week thing. But not too positive on that. Definitely Sunday afternoon, evening. Okay, around 5 to 7 p.m. rather. Okay, get next week start popping off. All right, y'all be safe today. Peace and love. Make sure to practice good risk management. Make sure to keep. All I gotta say, dude, keep fucking. Just don't give up, man. Don't give up on yourself. Don't give up on a dream. Keep focused. Keep positive. You're gonna. Some days are gonna be bad. Some weeks are gonna be bad. Some months are gonna be bad. Some years are gonna be bad. But keep positive. Keep the good mindset. Glass half full always. Once you start focusing on the good things in life, the good things start rising more often than not. When you start focusing on the bad things, when your life starts really, turning into that. So don't do that. Be positive. Have glass half full type person. Let's get it. All right. Till then, catch me this Friday or this Sunday for sure. I'll make sure to keep you guys posted once with that. So y'all be safe. Much love. Peace out. This is your boy, Sniping Motherfucking Heavy.